Hello everyone and welcome to today's morning report chart analysis videos with me, Rich Market Analyst at Hantec Markets. On Monday the 14th of August we've got a relatively risk positive open actually today, and that sort of comes as these tensions over US and North Korea have just started to dissipate slightly. Suggestions from the White House officials that they're going to be sort of pushing for diplomatic resolution really to this conflict, potentially that is going to be sort of helping to pull markets away from a more of a safe haven bid, which has driven the yen stronger, gold stronger, treasury yields lower in the last week or so. And you can see that today with the gold price 0.5% lower, the yen 0.5% lower as dollar yen's rallied, and also we've got treasury yields which have bounced. 10-year bouncing back to 2.22, 2-year bouncing back above 1.3. Now we saw that sharp move to the downside on Friday, and that came after inflation in the States again disappointed. That really is sort of meaning that the Fed is going to struggle, I think, to hike again this year. Really, I think the likelihood is they'll push ahead with balance sheet reduction, but they I think really are going to struggle, I think, to justify another rate hike, and there's going to have to be some seriously impressive or serious improvement in inflation data in the next couple of months, I think, to really sort of position the market for a rate hike in December, and at the moment it certainly isn't that case. Also, comments from Fed member Kaplan on Friday suggested the same sort of situation, whereby he was sort of questioning another rate hike, whether that was possible or not this year. So that hit the dollar on Friday. A bit of a rebound today as yields have rallied. Yields have risen, driving a bit of dollar rally. We are seeing a bit of dollar rally across the board, really. But is it anything more than another sort of dip that you can buy into? Certainly on the euro, I'll show you that on the chart analysis in a bit. But yeah, interesting moves that we're seeing today. That improvement in risk appetite also hitting, sort of pulling markets higher on the equities as well. Across the board, equities are positive in the European majors. The DAX is the big outperformer there today. But yeah, some interesting moves we're seeing nonetheless. Now, in terms of economic data today, not a great deal, really. Eurozone industrial production. If I can get the table. Eurozone industrial production at 2.8%, with a month-on-month decline of 0.5%. We have had Japanese and Chinese data out overnight. Japanese growth of 1%, annualized at 4%. That is an incredible sort of upside surprise, and that is an interesting factor that's going to help to drive risk appetite. But you've got a flip side of that, which is the Chinese data disappointed across the board. Fixed asset investment and industrial production and retail sales all missing expectation. So sort of tempering the mood slightly, but certainly there is still a risk positive outlook nonetheless today. Now, my chart today is the Kiwi. Now, what we have seen in the Kiwi, big strong rally of 3 months, is now being retraced. And the retracement is building this new downtrend, and it's breaking through support. So you had the support at 74 figure broken, you had the support at 73.50 broken. You're now coming back to this 72.50, sort of 72 to 72.50 pivot band, really. 72.50 had been an old one, but there was a low at 72 figure. So between 72 figure and 72.50 there's a big support, and if that's broken to the downside, that could be a significant move. Now you look at the momentum indicators, look at the RSI buzzing around 40. 50 was where we saw the low in July, where we saw 72 figure. MACD lines aren't there, are they? I'm going to have to get them back. MACD lines are, I can tell you, negative, and also we've got the stochastics negatively configured as well, so really are showing through as a corrective move potentially building here. And with that downtrend intact, we've fallen over again at the downtrend. We're seeing the moving averages rolling over, and you can see on the hourly chart as well, lower highs and lower lows, finding resistance underneath the 144-hour moving average, failing on the momentum indicators, rolling over today, sell signal on the MACD lines, stochastics are negative, and the RSI falling back below as well to the 40 area. So it is sort of gathering momentum once again today. So it looks like this rally is already rolling over and building momentum to the downside. You've got a bearish outside hour candle. Bearish engulfing, gathering momentum to the downside once again. So it looks like it's going to retest the low 72.50 area as the support, and as I said on the daily chart, 72 figure as well is a negative, is a support that could come under pressure. So rallies being sold into on the Kiwi. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.